Yeah, I'm very fine.
Good stuff. So let's make a start. Just looking at 1 minute for the... Okay, that's great. So we will be looking at covering learning outcome 3 today, which is what is left on this particular unit, which is sustainable business development. So today we are going to go into details of, looking at triple bottom line concept, which is something which is quite important as far as sustainable business practices are concerned. So we'll be going into a bit of detail today on this particular topic, and also because this particular learning outcome says be able to review. So when we talk about be able to review, we are going to be looking into understanding how we can actually give an example, and then essentially explain some of the assessment criterias, related to this learning outcome. So we need to be able to express and obviously look at by taking up an example and complete some of the assessment criteria which will be related to the assignment brief, and they would be analyze the concept of triple bottom line concept. So Paul Ilkington, which introduced this concept, we'll be looking into this in a bit more detail. We'll also be going into details of determining how change required within the business organization helps in meeting the sustainability agenda. So when an organization decides to look at embracing change or embarks on a process wherein they would implement change within the organization, then in those cases, we will also be looking at the process through which, how they bring the sustainability agenda and merge it with the change management which is happening within the organization. And then last but not the least, we look at reviewing the process of sustainable strategic business planning. So this is a key word when we talk about sustainable strategic business planning. What we mean by that here is that we are going to be looking at a business strategy that will incorporate both economic, environmental, and social factors being taken into account when the company looks at long-term planning in terms of its business or the benefits that it is looking at, obviously deriving from the economic activity that it carries out. And that would be looking at utilizing, obviously economic, environmental, and social, which is people related aspects of it to be able to, produce goods and services, which it primarily then sells to consumers. And that is where the business plan, which the company generates, has to be mindful that it is looking at conserving and also protecting excuse me, the natural environment and the resources, for the future generation. So these are important concepts that we are going to be looking at. And because it says be able to review, I think one of the things that we have to keep in mind is that we will have to do this particular learning outcome and the associated activities in the assignment brief with the use of application of theory and the examples to underpin the theory, and that will bring out how you actually put this into practice. Now, from a point of view of, obviously discussing this, we will use a few presentation slides that I've got. And these presentation slides, will be slightly refreshed, because what I would want to do is for 3.2 and 3.3, essentially you will have to do a bit of reading, and this reading would essentially help you finally to pick up an organization and then look at the concept of how you could look at strategic business planning with sustainability as an agenda, and then how does the organization meet this business plan from a long-term point of view. Now let's look at one of the key terminology that we want to in this particular learning outcome, and which is what is sustainable strategic business planning. So this part, which is what I have described right now, we need to look at this from a point of view of an example later. And this basically is defined as I mentioned, a business strategy which the company would be looking at forming and using it in the future, but keeping in mind that it is able to create this strategy with the knowledge that it has to help in preserving and also conserving some of the natural and economic and people related resources, so that benefits can be going to the community in general when it looks at increasing its business. Now there are a few case studies which obviously can be looked at, primarily from a point of view of this particular topic, which is sustainable business planning. And sometimes it is going to be essential for us to refer to a particular case study, because this would be useful for us to put it into perspective with the use of an example. So what I've done also from a point of view of in particular going into detailing of this particular topic in general, I have also got a case study which I would want you to look at. And this case study, or an article which has been published, primarily looks at giving more information on how a business looks at forming a sustainable business strategy. So when I upload this particular article up on Moodle, you'll be able to see that it gives you a good insight into how businesses can essentially look at creating a sustainable business strategy. And then also, while they create this business strategy, the word adding of this word sustainable, is primarily going to be kept in reference, because what the company or the business is trying to do is look at its economic activities, but taking into account the consideration of environmental impact its activities can have. And that would be helpful for you to understand how the agenda of sustainability essentially can be incorporated into a long-term business strategy by an organization. So this particular article, is about a 12-page article, but it talks about the origins of why sustainability became important, how the concept actually started, and then when companies look at the increasing aspect of globalization, and when they look at their operations, across multiple geographies and multiple countries, then in those cases, it is having to look into this particular agenda of how they would look at ensuring the benefits to the community, which is the P of the 3 Ps that we talk about, or the 3 pillars that we talk about, not the 3 Ps, sorry, the 3 pillars that we talk about, which is people, profit, and environment in general, have to be looked at. So in some cases, when it outsources its business to look at, cost efficiencies, it has to make sure that it is able to return benefits of its business operation to the wider community. And that is where people come in. And then when we look at environment in general, because it is a global business and some part of the operations in that geography mean that the organization would be looking at procuring or, getting local resources, then it needs to keep the agenda of environmental sustainability or conservation or preservation in mind. And these are synonyms which are highlighted, here. So when we talk about environmental sustainability, we would use words like sustainable business, environmental strategy, social strategy, sustainable business models, corporate responsibility, shared value creation, and sustainable value creation. So these words would essentially all be referring to sustainability agenda of the organization, and they might be used in different places with different connotations, but essentially would mean the same, that the company is looking at driving its sustainability agenda in the long-term strategy of the business. So a very good article which has been published, and this summarizes why companies need to look at sustainability, what was the origins of that, what are the criticisms to sustainability, what are the limits, and what are the future prospects of where companies can apply sustainability. So this particular article, which is a 10-minute read, generally I would suggest is something that you would need to read in the context of this learning outcome, which is learning outcome 3. I would not say it's a case study, but it's primarily an article which has been published, which basically looks at beautifully summarizing how this has become important in today's climate when we look at companies operating globally. Now, if we go into some of the other key terminology related to this particular unit, So I will mention it here, read the article on, and this is on Moodle for further understanding. Now let's look at what are the other important key concepts that we want to talk about, which is related to learning outcome 3 in terms of understanding the sustainability agenda of the organization. Is one of the concepts which we have been covering more or less thoroughly throughout the discussions on learning outcome in 1 and 2, is the triple bottom line concept. Now, triple bottom line concept, when we look at the origins of it and we look at how this came about, this was proposed by Elkington. And when we look at this was primarily an accounting framework first. So when we look at the 3 pillars of sustainability and we talk about it in that context, this particular framework of sustainability was actually adopted into the company's agenda because it is primarily an accounting framework which has 3 components. And these 3 components, are planet, profit, and people. So that is where the 3 Ps come about. And the breakdown of each of these component, is directly related to how the bottom line of the company essentially, or, the profitability of the company essentially works. So when we talk about profit, this aspect basically focuses on the company's financial performance and profitability. It looks at some of the financial metrics that the company would want to look at in terms of revenue generation, expenses, and what is the cash flow, the liquidity of the organization, which is primarily coming out of the concept of it's selling goods and services to consumers. When we talk about people, the people component of it focuses primarily on dimensions of sustainability. So here it looks at evaluating the company's performance and looks at what contribution it does to the well-being of its employees, its customers, and its communities, and in general society at large where the organization actually works. Now, these factors, when we talk about people, could include labor, practices, legislation, diversity, inclusion, wellness, and well-being in general, and what would be the benefits of the company's operation happening in a particular area. So sometimes you see when governments look at introducing or attracting business and business opportunities or private investment from the private sector within a particular location, it looks at giving the companies some sort of, soaps, or for example, some sort of, let's say, you want to use the right word, which is give them some sort of, exemptions for a certain period of time from taxation or for paying value-added tax, or, areas in which it will allow it to basically recoup some of the cost which the company is going to invest. Now, in return, sometimes government policies and regional players or government regional policies, essentially expect that the company would be able to create employment opportunities over a point in time that will lead to the upliftment of the area in terms of its economic activity. And these are some of the derived benefits which the government looks at while giving exemptions to a business or an organization which is setting up operations facility in terms of manufacturing in a particular location or say a particular geography. And that is where it relates to people, is that in general, the company's operation over a period of time, or from a longevity point of view, how would it return value back to the community? And will the company or the organization engage in some sort of, let's say, do a community engagement wherein sometimes you see large organizations when they start operations, say, for example, oil companies, when we look at when they start operations in certain locations, they end up creating what are called local communities or villages or, towns, because that's the only source of income for the people which get employed within the industry or the industry which the company or the associated companies actually create. And that is where the return in terms of people or investment back to the community is looked at. The third part that we generally talk about is the planet. Now, here is planet is referring to environment. So essentially, this particular dimension or the component of the triple bottom line looks at companies' environmental impact. So it considers factors such as, resource conservation. We will look at things like pollution reduction in terms of, material being sent to landfill or polluting some of the natural resources. If there are rivers or water bodies, or for example, natural flora and fauna, and how the activities of the companies actually look at reducing pollution. Now, it could be noise pollution, it could be air pollution, it could be pollution which is pretty much happening, not visible to the eye, but it could be pollution which is looking at, things being sent into water bodies or, earth in general, and that would, over a point in time, tend to create harmful effects for the environment. It will also look at how does the company look at minimizing the effects of some of these pollutions. Now, sometimes businesses cannot, let's put it this way, totally remove or eradicate the, negatives of what it activities contribute to. For example, if a company is into coal mining, or the company is into some sort of mining or mining of natural resources, then it will lead to queries, it will lead to the creation of pits, it will lead to the creation of accumulation of water, and in some cases, treatment plants and other bits would need to be created on site, which at some point in time, over a period of time of the operations of the company, can lead to pollution of water tables or, the local environment. So in some cases, what the companies and the organization's long-term sustainability agenda looks at is that how can it include or bring across some of the business practices which would allow it to reduce the harm to the environment. That means, for example, if a company is into tree cutting or tree logging, that means it basically is into the timber business, but it supplies that timber by deforestation or cutting forests, for the production of paper and some of the associated, industries. Then in those cases, that is a negative impact of what the company is trying to do by doing logging or timber, obviously dealing in timber trade. But such companies, in order to look at reducing its harm on the environment, essentially then also look at areas in which they are doing this logging. They also look at replanting or replantation, and then own the land so that they can grow some of the trees primarily for the purposes of logging or timber. And essentially, in this case, they would replenish some part of the area when the logging has been done to, replenish it from a point of view of further growing the trees, for the future. So in such cases, some of the activities which the companies would have to look at would be looked at from these aspects of the 3Ps, which is what we get to see covered within the triple, bottom line concept. Now, holistically, if I talk about this particular concept, this is a concept which became important because John Ilkington, which is the British consultant hired, and he's now named as the sustainability guru. He coined this particular phrase, triple bottom line, and because this was the only way that you could have one particular framework looking at how the company's operations affect the community, the planet, and the bottom line of the company. It gained traction, when it was introduced, and because this became a lever through which essentially the performance of the three aspects could be related to company's performance over a point in time, this concept became quite important. Now, when we look at purely going beyond the financial measures, this particular framework also encourages business to take an approach which can be considered from a point of view of asking them to take responsibility towards people and the planet, alongside when they are looking at pursuing the pursuit for profits. Because all businesses, let's face it, businesses are formed because they want to look at generating profits. These could be done for the shareholders, employees, the board, directors, but essentially businesses are in the process of business because they are looking at essentially generating profit. So when we talk about the triple bottom line framework and how it can be used in the corporate social responsibility and sustainability side of key things within the corporate culture, we look at this that this particular concept helps us integrate three piece or the three aspects together. And later on, John Elkington also published a book which is called Cannibals with Fork, and this triple bottom line concept, then became something wherein he also demonstrated in detail the economic dimension, the social dimension, and the environmental dimension of how this framework can be used to to hold the company, I'll put it this way, to account for the operation it does and how it does and where it does, and thereby making the business responsible for some of its practices. So companies, if I put it this way, that if I look at extension of this concept of this framework, companies today are looking at investing into what are called sustainable energy resources. That means use of wind power or windmills essentially to generate wind power to essentially generate electricity, to look at reusing some of the and recycling some of the natural resources is being brought into where the companies are now using these avenues as avenues for investment. And these investments over a point in time are helping the companies reduce its environmental footprint. That means the carbon footprint or the, any sort of, let's say, any sort of byproduct which is coming out of it, or a waste product which is coming out of the operations of the company, they are being held accountable by asking them to reinvest into some of the renewable sources of energy or renewable sources which would essentially help in recycling and reuse of some of the material that would reduce the environmental harm or environmental pollution in the long run. Now, this particular concept, sometimes, is also, let's put it this way, used to, let's say, talk about the company's corporate social responsibility. That means how is the company socially responding or, looking at giving back to the community. And in those cases, it has become important for the companies to have what is called the sustainability agenda. And if they don't have a sustainability agenda, and we looked at the different ways in which companies can approach this. So some of them approach it from a point of view of, sustainable practices for business. Some of them look at environmental strategy. Some of them look at social strategy or look at corporate responsibility or shared value creation. Now, in those cases, we are basically all referring to the concept of sustainability. And what we are expecting is that the company is going to be looking at, its operations and its, let's say, some part of the operations which the company actually does, would be looking at sustainability and business ethics in a context wherein it is going to be ensuring that its responsibility towards the environment, responsibility towards the planet, and responsibility towards people or community is following what is called sustainable business practices. It has to create a balance between these three. And this is where the business ethics comes in, because what the company should not be looking at doing, or the board of the company should not be looking at doing, is should not be looking at excessively driving profits or excessively driving production. Say, for example, if a company is into, say, mining, and when we look at, some of the activities of the company, so it would need to consider that, is this going to be beneficial for the community? Is it going to be beneficial for the society? Is it going to be, obviously, they are increasing the business. They see it as benefit in terms of increased profitability for the company. But where the balance needs to be brought in is the one wherein it impinges on the business ethics and the management and the board, which is driving these objectives, to say, no, we should look at a fine balance between the three, which is preserving the planet, ensuring that we are able to return some benefits to the community or people, and the activities of the business are done in such a way that it helps generate profits or enough profits for the company's operations to sustain or continue. And that is where sometimes we would see that we would have different connotations of sustainability it being incorporated into the business strategy of the company. So sometimes we would see the word corporate social responsibility, which could be seen as, describing that how businesses balance their social and environmental responsibilities, thereby also keeping their goals and long-term goals into view. That means let's look at one of the examples that I gave last time when we talked about the concept of sustainable business strategy was that Marks and Spencer's Plan A. When we talked about Marks and Spencer's Plan A, I don't know if you recall, but when we talked about Marks and Spencer's Plan A, we talked about that this plan was essentially, created by the board of Marks and Spencer in order to essentially, look at the activities of the company, but at the same time, look at including how its products are sourced, how its products are made, and how these can be used to reduce the waste that the activities of the business generates, and what it tried to do over a point in time. Now, obviously, when we look at carbon emissions, the movement of stock that it does across different warehouses and storage facilities creates a lot of carbon emissions. So what the company looked at was, now in terms of if it has to look at implementing some part of this immediately, that would mean the company would need to spend lots of money, and that would mean that it could hit its profit, because what you're trying to accomplish in terms of a strategy would require a certain amount of time, resources, and training and development to happen before these can become a part and parcel or a norm within the company. Now, if you try and do these changes or implement these changes on an ad hoc basis, what you would see is that the company would need to spend more money or deploy more resources to be able to, achieve that objective. So what the company did was, in order to look at making it a part of the overall operations of its workings, it employed or created what is called a Plan A. And this Plan A is a plan which it has created for 10 years. And what it wants to do is basically look at aligning with the government's strategy of reducing, let's say the limit in terms of climate warming, which is keeping it below 1.5 degrees. So what it wants to do over a point in time, first the 10-year plan, then an extension of this plan from 2014 to 2024, from 2024 or 25 to 2030, and then 2030 to 2035. So what it wants to do is it wants to bring all its operations in line and make it ready to be able to have something called a net zero emission strategy by 2035. And that would mean that the company's carbon footprint, which currently probably stands at about, if I remember correctly, when we discussed, there was an image which basically gave us how many tons of carbon dioxide its business activities, emit. I think when we look at that presentation, LO2, what it wants to do is bring it down to zero. That means it will create strategies within its business. That means it will employ funds or create facilities within its business that would basically look at making the emission of carbon, which is primarily the part which gets generated when it transports or it manufactures its goods and services. That bit, it will basically deploy renewable energy, which will basically make the footprint zero. So for example, long story short, if I have to give a current practical example, is Marks and Spencer has over, say, 3,000 stores in the UK. Now, when we look at their stores, they use a lot of electricity. Electricity is generated through nuclear power or hydroelectric power, or in some cases, by burning coal. So it is coming from some sort of a fossil fuel. And that means that the stores, the more energy they use, that means in terms of gas and electricity, it is creating a carbon footprint. Now, how does a company look at reducing or making it zero in a span of 20 years, or maybe, first phase 10 years, second phase 6 years, third phase, 4 years? How does it make it zero? So first and foremost, the company has started to invest in what are called, energy efficient lighting. That means traditional bulbs or traditional lighting within the stores has been changed with energy efficient lighting. That leads to a reduction in the electricity bills. Now, in order to prevent heat from escaping, what it has done is it has also looked at renovating its stores, laying out, changing the layout of its stores, which allows the stores to be more energy efficient. That means when customers are shopping, obviously the store needs to be air conditioned or warm or cold, depending on the climate. But in those cases, what it is doing is changing the layout of its stores so that it is more energy efficient. Now, in the first phase, that is what was done. In the second phase, what it wants to do is generate the energy through renewable energy sources. Things like wind power, solar power. So in some of its stores, which are independently operated, the rooftop of these stores are being installed with solar panels, which would allow it to use renewable energy. And that would mean its dependence on gas and electricity would be reduced, thereby reducing the carbon footprint. And in the third phase, what it is looking at doing is it is looking at generating some of the excess energy which is required sometimes when operations require excess energy. It is looking at managing it through a grid wherein the stores and essential part of the operations in certain locations would be connected, and that would allow the rerouting of energy and some of the supplies to be done in such a way that it would, if one side is producing more and the other side produces less but requires more, then the rerouting of that could be done in order to make it self-sufficient from a point of view of its operations. And that is what the plan A of Marks and Spencer is. And that basically relates to what is called the corporate social responsibility, wherein it is over a point in time. When I say point in time, it's a long-term plan. It is looking to integrate its business activities in such a way with its operations that it is then going to be viable for the business to be able to look at reducing the dependence on let's say fossil fuels, looking at use of more reusable or cyclable, say for example, obviously from a point of view of energy, reusable, but from a point of view of waste and other things which is coming out of its operations, that waste would be again utilized to generate energy, and that would mean that the operations of the business over a point in time will be changed in such a way that it will become self-sustainable, it will reduce the emissions down to net zero, and it will help in achieving the overall goal of the company, not just for a short period of time, but effectively changing it, for good for the future, wherein the dependence on fossil fuels is going to be made, I'm not too sure, but will be brought down to zero or made negligible, and most of it would be replaced by renewable energy sources. So this concept, when the company adopts from a long-term strategy point of view, by looking at fundamentally streamlining, changing, or bringing across a change in its operations so that the modulus operandi or the way it operates becomes a norm that would allow it to reach net zero in terms of emissions, would be termed as a long-term sustainable business strategy. And that could be covered under CSR or could be covered under sustainability agenda of the organization. So in the case of Marks and Spencer, Plan A, which is to save the planet and obviously making its operation more, energy efficient, and thereby at some stage becoming net zero, is covered under the sustainability agenda of the organization. So is this understood? Is this clear? Any doubts, any questions on this?
Yeah, understood. But could you please little bit describe this profit? You use the word profit when you are talking about triple bottom line. So I understood planet and people, but profit, could you please explain a little bit with one short example how we can proceed with this word or explain?
So when we look at, one of the P's, which is primarily the profit side of things, now any company's operations are geared upon increasing the profitability of the organization. So profitability can also be interpreted as what is called the financial return, which the organization looks at generating for, basically against the operations that it is doing. So if you look at, for example, a case in point of, say, a company which is, heavily dependent on, say, financial performance. For example, when we talk about services business, or when we talk about certain businesses wherein the financial performance in terms of generating profits or generating more revenue is important for its shareholders, then in those cases, the company needs to balance its long-term planning with the initiatives of reaching, say, having a sustainable agenda or meeting its sustainability agenda goals by carefully considering how much profits it is going to generate while reducing costs or by looking at mitigating risks to the environment. So what I'm basically focusing on here is to explain that how does a company look at rationalizing the generation of profits against some of the goals that it wants to have in order to help, one, preserve the environment or conserve the environment, and the second is when it is looking at working and returning back to the community or the people that work for the organization. Obviously, the salaries would be one aspect of it, which is what a basic expectation is. But beyond the salaries, that would basically mean that when the company looks at paying dividends, or when the company looks at, obviously paying bonuses and other type of incentives to its management, shareholders, the board in general, because the company has had a very good year or has, had a very good turnover in terms of, its operations, what it needs to do is rationalize how much profits does it generate on the expense of, the planet, or how much profit does it generate on the expense of, not being able to return benefits back to its community, which could be employees, suppliers, partners, the wider community in general. And that is where it needs to focus on how does it rationalize or just not solely work on, the economic impact of its business to generate or increase its bottom line. That means increase the profitability of the organization. So when we look at leadership within the organization, the leaders in the organization have to look at creating this balance of how much is too much and how much is going to be the impact, or what is the impact which is going to be on the environment of its activities if it continues to pursue just profits, and what kind of an impact would it have on the people in general which work within the organization to carry out those activities or for the organization to achieve its goal. So the leadership in conjunction with the long-term goals of the organizations have to have a positive effect or have an impact in such a way that it looks at helping in changing or maintaining a balance between what it generates in terms of revenue, turnover, and profit, by keeping in mind how it is preserving or conserving the planet and what it is being able to, return in terms of positively impacting the people or, people in general, impacting their society. So in some cases, here the business would be focused on essentially, looking at managing its financial performance and profitability in such a way that when we talk about financial performance or profits in general, we are talking about revenue, expenses, and the overall, profit it generates from the activities. How does it regulate that to ensure that, there is a balance between what it produces, what it achieves, and what it gives back to the environment and the community. And that is where the balance has to be maintained. And that's why the profit, part comes in. Now, to give you an example, let's look at IKEA. Now, IKEA is a furniture company, or basically it produces, for example, furniture. Now, because it's a private business and it operates in so many different countries, it's at some stage needs to look at understanding that how do we look at, creating a balance between how much the company, say, let's say, produces in terms of furniture, which country and operations does it have, operations in. And to a certain extent, what we also want to understand is the company's main goal when we relate it to the triple bottom line concept, that what is it that the company wants to portray itself as to its consumers. So when we talk about IKEA in general, if we talk about people, profit, and planet, so when it talks about people, IKEA wants to be looking at obviously increasing its demand for its product because the company wants to grow. But at the same time, what it also wants to do is take care of its people by following ethical, practices in terms of paying the minimum wage, making sure there is a life, personal professional life balance between how it employs workers and what are the shift timings that it allows the workers to have within the stores. And the last but not the least, how does it look at creating, managing its operation within the store? As you know, IKEA stores are huge and they have a large footprint in terms of use of electricity, heating, and some of the other, bits which are actually contributing to carbon emissions and thereby, contributing to the global, climate. So in such cases, the management has to look at, deciding that how many stores it opens, which, stores, and how does it rationalize, for example, or modernize. The correct word is, how does it modernize the existing stores to reduce the carbon footprint? How much money in terms of revenue that it generates is then redeployed into the modernization of some of these stores would be related to the profit aspect of it. Because the new stores it is constructing, they are more energy efficient, they are more self-sustaining, they are using renewable energy to be able to meet some of the requirements of electricity and gas, from the aspect of heating and other things. But at the same time, the management is also investing into what is called, modernizing the existing stores, which are already there in certain countries. And the investment is basically being drawn down from the profit the store operations or the company's operations generate on an annual basis. And that is being replowed to ensure that the new stores, along with the old stores which are already present, are helping towards the company's achievement of the corporate sustainability goal or the social responsibility that it has towards, helping in reducing the carbon footprint. So the profits part of it are being redeployed. Although it is generating profits, but some part of it are being redeployed to modernize and, make the existing stores more energy efficient so that their overall contribution to net emissions is being brought down over a period of time. Is that okay?
Okay, nice.
Now, there is a particular, handout that I can also share, which is, looking at this particular example of IKEA and how does it drive sustainability. So I will also upload, because when we look at large companies and we look at, IKEA's sustainability report, which you can also access from the, company's website, it basically very clearly highlights what it does. And when I say what it does, what I mean by that is what steps does it take to ensure that its stores operation, people, and planet, and the impact that the operations of the store are positive across the three when we look at the triple bottom line concept. So every year it is investing money. If I just bring this and show this, like Marks and Spencer we looked at. So every year this is where the profits come in. So in financial year 2022, it is estimated that it would create this many million tons of CO2. Now, in order to look at meeting its sustainability goals by 2030, it is reinvesting and reducing the emissions year on year, as it can be seen that in financial year 2021, it decreased. 2022 saw a decrease of 5%. And before that, they have looked at a decrease of 12%. So what they're doing is they are reinvesting the money which the business is generating from its stores in terms of profits into modernizing the existing infrastructure. And that is very clearly explained in terms of how the company deploys its profits that it generates from the business to help in preserving and conserving the environment and also giving back to the people. So, for example, it has looked at, when you talk about people, it has looked at reevaluating its compensation structures to ensure that people are paid adequately when we have a cost of living crisis. It is looking at, obviously, with some of the pictures that we look at, it is looking at obviously deploying renewable energy to be able to meet energy requirements for its stores, and then whereabouts it produces or procures its raw material, because obviously they are in the process of creating, their main business is furniture. And what they're looking at doing is reusing some of the old furniture or, wood from the old furniture and creating a type of wood which can be reutilized for creating furniture, and obviously reducing the waste which is then sent across to landfills. So these are impacts which the company is measuring its operations against when we talk about people, profit, and planet, and the reinvestment of money which is going to make its operations more sustainable. That means helping in conserving the environment, but also being fair in terms of providing wages and let's say living opportunities to its employees. It is giving back by reinvesting that money generated from the operations of the company, and that is where the profit, the bottom line, of the company being used to reinvest into the sustainability part of the operations is basically the example I would give, for the profit side of things. Now, with this understanding, let's go into some of the assessment criteria. Now, here the first one talks about analyzing the concept of triple bottom line and reviewing how it is implemented in business organizations. So this particular part of the learning outcomes assessment criteria is basically looking at taking an example. And here I would suggest that you could take the example of IKEA or, say, for example, Marks and Spencer's Plan A, and then relate it to the fact how the company is reinvesting some part of its profits into activities of using or bringing renewable sources of energy in order to drive efficient operations, and thereby implementing. Obviously, none of this can happen overnight. So this part of the reinvestment which it is doing in order to ensure that its operations are more closely aligned to the triple bottom line concept of sustaining the environment, giving back to the community, and also being economically viable as a business. That means still generating revenue and viability in terms of the business, because it employs staff, it has to pay bills, it has expenses. So all these things are being done in the consideration that some of its activities are going to be looking at driving the aspect of ensuring that the business is viable, but at the same time looking at making sure that its activities are being done in a reasonable manner, which are going to be beneficial for the people. When I say people, it means staff, employees, partners, suppliers. One of the things that you could quote in that would be, like, if IKEA negotiates or asks for heavy discount, or for example asks for more credit line from its suppliers, then this could be detrimental to its suppliers, because generally, if you look at a credit line, most suppliers would expect that if you are buying in bulk, you are getting discounts in terms of bulk pricing, then you should be able to pay promptly to be able to help run their side of operations as well. But if IKEA demands that we need a 90-day or a 180-day credit line, but it is also heavily asking for discounted prices because it buys in bulk, then this would be putting excessive pressure on its suppliers and partners. And that would mean that although IKEA is still able to procure raw material for its own production and business, but this will make some of the partners and suppliers which are providing their businesses become unviable, because they won't be able to support the credit line, or they might not be able to discount the prices the way raw material costs or prices in a way which IKEA is demanding. So that would be an unexpected aspect of that the company is not looking at some of these aspects. So here it needs to balance what it is buying from its suppliers in terms of its responsibility from a social aspect, and thereby ensuring that its own operations are also profitable. And that is what you would need to relate to when we talk about the example of the analysis, or an example using the example for the analysis of the triple bottom line concept. Is that okay?
Yeah, sound good.
So you'll have to take the example here to be able to cover this particular part. And I have looked at putting some different examples here in terms of companies that you can look at. So the Lego group, for example, Legos, obviously, they have everybody's used a Lego during the child days, but Lego is basically plastics. And when we look at environmental sustainability, it creates billions and billions of Lego pieces which can end up in landfills or end up in our oceans. So what Lego is now committed to is how does it reduce its carbon footprint? It is working towards creating operations or realigning its operations in a way wherein 100% of the energy is going to come from renewables. The other thing that it is also doing is it is working with a lot of NGOs in order to give back. So when you buy Legos, essentially some part of the donation or the money being generated from its business operations, it's being utilized to look at replantation of trees, or helping in preserving the wildlife. And they are what are called the agendas which the company is looking at driving long term, in order to achieve its goal towards meeting a balance between profits, planet, and people. So there are lots of different examples that I mentioned here. They are very briefly mentioned, but what you will need to do is at some stage look at some of them and expand it and relate it to the triple bottom line concept of how they are doing it in general. So IKEA's report, which I've shown, I will upload on Moodle, and that would help you understand the various aspects of it in terms of quoting it for the purposes of analysis. Now, the second task talks about determining the change which is required within business organizations to meet sustainability agenda. And the next learning outcome talks about, next assessment criteria talks about reviewing the process of sustainable business planning. Now, for both these tasks, you have to do a bit of independent research and reading. And this is going to come from the handout which I've uploaded up on Moodle. And this handout essentially would be talking about how businesses can look at, driving a sustainability agenda within the organization. Now, this is a report or an article which is created in, which is a research which is essentially done by one of the accounting firms like D&T, Deloitte and Touche. And what they've done is they've basically explained what are the requirements of the business for a business organization to have a sustainability agenda and why they should have it. So when you look at reading this particular report, there are parts of this report that you will be extracting and writing in your own words to cover what change the company needs to do. Any such organization, it is being discussed in a generic way, that what changes does the company need to do in order to basically drive what is called a sustainability agenda within its operations. So one of the things that you would look at is going back to the example of Marks and Spencer very briefly. Now, in order for it to look at driving this change, there are, say, for example, one of the things that the company or the management needs to have is it needs to have the systems to be able to track this change happening within the organization. Now, this tracking of change essentially would mean that the company would need to invest into, say, management information systems or some sort of systems which would allow this particular important process and its output to be captured. So one of the things which would be required would be to train and develop employees to understand what is sustainability and how sustainability can be driven within the organization and its activities. The second would be the company looking at performing, say, for example, a stakeholder analysis and seeing what contributions the individuals, different, when I say individual, I mean different stakeholders would be able to do in helping the company drive the sustainability agenda. Now, what are stakeholders? Stakeholders are people who have a vested interest within the organization. So these stakeholders would be employees, board, management, bank, the government, partners, suppliers, customers. And these would have varying agendas or varying, let's say, expectation of how they would be able to contribute towards the sustainability agenda of the organization. So when we talk about how the business looks at bringing change within the organization, it needs to start with stakeholder analysis to understand what concerns, what stakeholders will have, and what their contribution would be in helping to drive that change which the organization is looking at towards sustainability. Then it will set policies and objectives. It will redefine some of its long-term policies or mission and vision of the organization, if I put it this way, and they would be amalgamated to include what is called the sustainability agenda. Once that is done, then the company would need to embark on training and development within the organization so that everybody is actually singing from the same songbook. That means everybody has the same understanding of, when I talk about IKS sustainability means that they look at reducing the packaging to as far as possible so that it allows less material to go to landfills. It looks at reducing its cost of operations by utilizing renewable sources of energy. Third, it looks at reusage or recycling of furniture to be able to reproduce and obviously recycle that and then reproduce and remanufacture furniture using MDF, which is a type of wood which IKEA has invented, and that basically wood is something which is primarily the medium density fiber board, which is primarily reproduced or produced from recycled wood, and that is then utilized by the organization in production of its furniture or certain type of furniture that it sells. Now, these are 3 or 4 such agendas which everybody needs to understand, and when everybody is understanding the agenda, then they would be looking at taking steps towards driving the sustainability agenda within the organization. Then the organization needs to design and execute a plan. That plan would be driving the change within the business and helping the business over a point in time to achieve the sustainability agenda. That is what we get to see in Plan A. It is not something which has happened overnight. That is what we get to see when large organizations like IKEA drive it. And this is something which is explained in this particular handout. So when you look at the assessment criteria 3.2 and assessment criteria 3.3, you are going to be looking at determining what business needs to do in terms of ensuring that it can drive the change required to include sustainability as an agenda within its operations. So when we talk about this as a concept, like some companies might not have even thought of this because of the fact that their operations, they are startups or their operations are not significant enough to cause any major concerns. But for large organizations wherein sustainability is a concept which can be clearly picked up by government legislation and by stakeholders, then in those cases it needs to start employing what is called the long-term change of developing a strategy which would allow it to essentially include this particular part within, its operational strategy, and thereby looking at, contributing towards, creating a change in the organization, and that would drive what is called the sustainability agenda within the organization. So here, what we need to look at is determining the changes that are required within a business organization to meet this agenda from a multi-dimensional approach. That means it'll need to take into account operations, its long-term strategy, its strategy towards people, and how it utilizes the environmental resources, and thereby taking all of these into account, it will then firm up or create a strategy that will be going forward into the future and ensuring that this particular aspect of sustainability is driven within the organization. So sometimes they will look at this from a point of view of ensuring that they involve even external parties or consultation. They do consultation to include these changes comprehensively in such a way that they're planning, they're innovating if required for business models, putting in investment and addressing some of the barriers and drivers that will drive this change would all be a part and parcel of the implementation and implementation plan. And that would allow the company to move forward on this particular agenda. Now, if you struggle to take up examples in terms of, the assessment criteria 3.2, please recall the mention of the Unilever's plan or Procter & Gamble's plan that I've mentioned earlier. And these are two examples that you can also refer back to, which will allow you to, kind of very clearly show how, say, for example, the use of Pampers, which I had mentioned earlier. And in the case of Nestle, when we talked about Nestle's operation in South, how it basically looks at, incorporating some of the objectives into its, manufacturing processes, thereby would allow you to determine change which the businesses need to do in order to bring sustainability agenda to the forefront. The next part, very briefly, is again review. So here, the review part of it can only happen if you take an organization as an example. So before we begin the process of review, or when you start writing about how the organization reviews its strategic planning to include sustainability, you will have to look at doing maybe a bit of a introduction on the business by maybe looking at SWOT analysis, or maybe just an introduction. And that would say that you have taken the current business and its operations and its practices in mind, and these are the ways it looks at its current activities from an economic, environmental, and social factors point of view. And then what you do is you would need to basically look at doing a SWOT analysis of what market it operates in. Because we are doing a review, so we'll need to follow these steps to be able to, basically highlight how you are going to go about the assessment in terms of the review. And then, so if I put this here just as an example, and then at some stage, what you would look at is you will help by reading maybe the sustainability report of the company, and then summarizing what are the objectives the company is actually taking forward from the SWOT analysis. So here, by looking at the sustainability report of the organization, what I would suggest is you would then develop what is called, if I just put this in steps for you, you will develop a very clear and a compelling plan which the company is looking at putting forward for meeting its sustainability agenda. And once that plan has been put, maybe a table could be used for the plan. So here, if I do, say, for example, compelling vision, so maybe example, a table for the plan, strategic plan. And that table essentially would be with some sort of a timeline, like Marks and Spencer's plan A is with a timeline. So when we look at Marks and Spencer's Plan A and with a timeline, it basically is very clearly highlighting in what years it is going to be looking at, achieving, say, for example, its, plan of achieving net zero emissions. So that bit has to be, put into perspective. So if I just very briefly show that. So this plan, you could essentially, for example, so if I look at this particular plan on its website, you would see this is a, immediate priority plan that it is created. But how is it going to reduce this to net zero? Some part of it is what they've described here. Now, what you would need to do is when you firm up your plan and you draw this as a table, my suggestion would be looking at taking a company like Marks and Spencer, IKEA, or Nestle or Unilever, which I've given examples of. You would then be looking at this table of strategic plan, how it looks at reducing, the net carbon emissions to zero, and with a timeline being presented. And then by reading some part of what has been written as verbatim on this particular website page, you would be able to formulate a strategy which describes what Marks and Spencer is looking at doing in order to reduce, its, let's say, in order to reduce its carbon emissions. And that would be looking at essentially describing how it looks at reducing waste, conserving resources, and how does it foster, or basically drive the triple bottom line concept. Then once you have created this, what I would suggest is you would need to list down some of the initiatives that the company is essentially driving on a day-to-day basis in order to achieve those, let's say, developments, or essentially make those, changes to its plan. And then what are the changes it basically does, primarily to make adjustments, which could be done from a point of view of, adjusting the plan for the purposes of, achieving this net zero emissions. So if I just very briefly put this onto a slide, and I put this reference here as well for you to understand. Let me take you back to the presentation. So I'll put this bit here just as a reference. And this bit here. So if I have to do this particular bit, what I will do is do a bit of assessment of a company, whichever one you're taking, either IKEA, Unilever, Procter & Gamble, whichever company you're comfortable with, Marks and Spencer. You do a bit of SWOT analysis, then you create a bit of a strategic plan with sustainability in mind as a table, in which you are going to consider what the company is looking at doing towards sustainability, which is basically environment, people, planet, and profits. And then what you're looking at is looking at reading the report, sustainability report of that organization, and seeing that what are the things or principles it is incorporating into that, which is, say, for example, in the case of Marks and Spencer, reducing waste, conserving resources, and building the foundations of everyone understanding what is their social responsibility, what role they play in the organization in order to maintain the social responsibility. Then the table that you've created for the plan should highlight specific goals, timeline, and who are the people who are responsible. And then sometimes plans have to be changed, they have to be implemented, course corrections have to be done, and how the assessment of these plans are done would essentially cover the aspect of the review part of it. So some part of it you could take as an example from here, which is the link, and obviously the example that we have discussed as Marks and Spencer, and that would help you in reviewing this particular assessment criteria, or reviewing the process through which a company essentially goes in and creates a sustainability agenda within its long-term planning. Is that okay?
Yes.
Any questions?
No, actually here you described that the sustainable planning process,
Yes.
strategic sustainable planning process.
Yes.
So we need to draw the sustainable vision, assess current situation, create a financial plan.
Yes. We need
So
a long-term plan which will be utilized by the company in terms of including practices which will help it to sustain its business with respect to people, being fair to the planet in terms of environment, and also ensuring that it is economically viable and continuing to generate profits enough for the company or the business operations to run. So
So
sustainable
we
business
need to
planning.
what is the meaning here? Assess current situation. Yani current situation of this world about sustainability.
So when we look at assess in general, and when we talk about assessing, so the criteria 3.2 is primarily looking at determining. So determining will mean that you will need to give a company first, and then explain what the company is essentially, doing. So determine as a word basically would require you to, first bring everything together. That means you are going to discuss and give a careful consideration of all the factors that will apply, and then what you are going to do is identify those factors in terms of why the company needs to drive or have a sustainability agenda. Like if it's a call center business, why would they need to have a sustainability agenda? Now, for the first few years of the business, they might decide that we don't need any sustainability agenda. But after a point in time, as the business is, starting to use some of the resources like PCs, they have to be recycled, or if they are expanding, the carbon footprint of the company is increasing in terms of electricity bill. When it looks at being fair to its employees, so what you have to look at is look at explaining and identifying what is the sustainability agenda for the company. And then, in order to put this into place, what are the changes they have to do in their operations to have it over a point in time? Because nothing can be suddenly implemented. So, here the case in point is when Marks and Spencer decided that we need to be, nice to the environment, or we need to reduce our carbon footprint, they realized this in 2014. But when the management started putting this process together, they created a 10-year plan, because they thought that this plan will be required, because it will not be easy for them to start bringing the change within the organization immediately. So you have to determine what is the agenda, when was it recognized, what are the factors it contributes, and why is it sustainability that is the agenda has to be included into the organization's long term operations. So you have to start with that concept. So there'll be maybe 3 or 4 paragraphs. First paragraph, business that you choose, why sustainability, you explain that, and then over a point in time what the plan has been produced, and then what are the changes the business is doing in order to achieve this particular agenda from a long-term planning point of view. That is what is to be covered in 3.2. And review would be you pick up an organization which already has an agenda. They have been driving sustainability for a couple of years, or for a decade or 2 decades. So here the example would be to pick up a company's sustainability report, which could be IKEA, Marks and Spencer, Unilever, Nestle, any large company. And what you are going to do is, from that report, see what are the key bits they include in the long-term planning, and in that long-term strategic planning of the business, what are the aspects of sustainability that they include in that long-term planning. And here, in order to see whether this is being implemented or not, you would need to look at doing a SWOT analysis. With that SWOT analysis, you create a bit of a table to show that this plan, they have this particular plan, and this plan relates to these 3 Ps across the plan for the organization. And then what you do is you look at reading that report, and then from that report, you look at what are the strategies which the management has formulated to deal with that plan. And is there a specific timeline? Who are the parties responsible? So the CEO of the organization might not be responsible for that. There'll be a department within the organization which will drive this change. And that would be the key people who are basically responsible for driving that change. And then what are the proposals they are putting year on year to meet that goal. That is what you will need to look at putting. And then your review is you're taking a view on whether that is being achieved. Obviously, I think the reports from the companies are clearly showing that they are able to achieve and drive this agenda. So that is what you need to summarize in the review, that this was the plan, this is how they're implementing it, and this is what they are achieving. So the review carried out shows that they are able to drive sustainable business planning across their business.
Okay, sound good, sir. And there is a final create a financial plan in planning process. So how we can talk about this financial plan of the company?
So yes, that's a good question. So in the sustainability report that you look at for any company that we are going to look at, there will be a financial plan which will be given in terms of projections, in terms of money being redeployed or profits being redeployed. And that financial plan snapshot is what you need to take into your calculations. So you're not looking at drawing up a financial plan, but my suggestion in that would be that you would be looking at taking some parts of the financial planning which is being shown in that report to include into the assignment. That how is it that where is the money coming from? Where is it redeploying its financial money or resources to drive this particular agenda? That is what you will need to look at, from a point of view of financial planning. So you have to extract some bits of it from the sustainability report to say that this is the contribution coming from here, this is the contribution coming from here, and this contribution which is coming is primarily coming from a business profits, and that is helping to drive the sustainability agenda within the organization. Okay, so we'll do the discussion on the assignment in our session next week. But that would be going into details of understanding how do we look at a financial plan or the financial planning process. I think the idea here would be primarily to look at using a good report, choosing a good company wherein the sustainability report of the organization also provides us some financial data. And that data is something that we'll be using primarily for the purposes of showing what resources, when I say resources, what money or financial resources it is redeploying from within the business to meet the sustainability agenda. Okay, sounds good. No worries. So thank you for joining today. And what we'll do is meet up next week to discuss, the assignment brief for this particular unit. And that is where we'll go into a bit more detail, looking at the tasks which have been set basis the learning outcomes and the assessment criteria we have covered. Okay. So I'll be uploading a couple of things onto the website, which will include, the handout 3.2 and 3.3 is already there. I'll include the sustainable business practices strategy as an article, which is there. And then the IKEA sustainability report. And last but not the least, a handout on IKEA itself, which basically shows and talks about how they have included sustainability in their business operations over the years. Okay. Thank you. And we'll see you next week.